The modern economy is credit-based. You will require a lender to issue you a line of credit if you want to obtain a mortgage for a home, a student loan to pay for college, or even merely use your credit card to buy lunch. Additionally, you must be deserving of that credit line. Your 3-digit credit score, which is the secret to your financial well-being, determines your creditworthiness. Having good credit may be the deciding factor in whether you are approved for a mortgage, vehicle loan, or school loan. On the other side, people with bad credit will find it more difficult to obtain a credit card with a low interest rate and will find borrowing money for any purpose to be more expensive. In this video, we will be talking about the importance of building a good credit score. But before that, make sure to subscribe to the channel and hit the bell icon for more amazing content. Let's start the video now without further delay. Synopsis. Even if you aren't looking for a loan, having good credit can still be quite important. Employers, insurers, and landlords regularly utilize credit information as a litmus test to determine a person's dependability and responsibility. Having bad credit can make you seem like a dangerous bet. Although your credit report only reveals the specifics of how you handle debt, some people will generalize the traits from your financial life to other circumstances. Your financial status and the rest of your life may be on the correct track if you have good credit. This implies that your credit score may have an impact on your insurance costs, the type of apartment you may rent, and even whether you get that new job. A decent credit score though. What is that? Let's take a closer look at what you need to do to improve your score inside the good credit range so you can benefit from having good credit by knowing why it's essential and how to develop a decent credit score. What is a good credit score? What does a good credit score mean? The FICO credit scoring mechanism divides credit ratings into 5 different groups. Poor credit, 300 to 579. Fair credit, 580 to 669. Good credit, 670 to 739. Very good credit, 740 to 799. Excellent credit, 800 to 850. All FICO credit scores between 670 and 739 fall into the range of good credit ratings. However, a lot of individuals define excellent credit as having an FICO score of 670 or higher. This implies that if your credit is exceptional or perfect, you automatically have good credit. Benefits of good credit. The advantages of having good credit are numerous. For instance, landlords are more willing to rent you an apartment. If you're looking for work, your potential employer may check your credit as part of the application process. But financial advantages are where good credit really shines. Here are 3 ways that having good credit can simplify and reduce the cost of your life. Easier credit approval. Banks and lenders are more likely to approve your credit applications if you have good credit. This implies that you will have a higher chance of approval when applying for credit cards, loans, or mortgages, and may have to wait less time for the results of your application. Low interest rates. People with good credit are frequently given cheaper interest rates in addition to better loan acceptance rates. Building your credit score is one of the wisest financial decisions you can make because paying less internet over time may save you a lot of money. Better loan terms. Better loan terms are frequently offered to borrowers with strong credit than those with bad credit. For instance, you might get a credit card with a bigger credit limit or be eligible for a low fixed rate mortgage. How to get a good credit. You must comprehend how credit ratings are determined and how to establish credit if you want a high score. The following 5 elements can make up your FICO credit score. Payment history, 35%. Credit utilization, 30%. Length of credit history, 15%. Credit mix, 10%. Recent credit inquiries, 10%. You must improve your credit practices as they relate to those 5 elements if you want to raise your credit score to a good credit score level. Payment history. Try to always make your credit card payments on time since your payment history accounts for 35% of your credit score. If you don't make up the missed payment as soon as you can after missing a credit card payment, it could seriously harm your credit score. Credit utilization. You can see how much of your available credit you are currently using by looking at your credit utilization ratio. Try to maintain your credit use below 30% of your available credit if you desire good credit. Try not to let your combined credit card balances reach $3,000 if you have $10,000 in available credit, for instance. Pay off your credit card debt as soon as you can if they rise above the 30% threshold. Thus, there will be less of a chance for such large balances to adversely affect your credit rating. Length of credit history. Lenders prefer to see evidence of your ability to carefully handle credit accounts over an extended period. This is why canceling old credit cards, even if you're no longer using them, is a poor idea. When you close your oldest credit accounts, your credit history is shortened because your credit report only keeps track of active credit accounts. Keep your credit card accounts open if you want to get good credit. Credit mix. 10% of your credit score is determined by the various credit accounts you have in your name. Your credit score may rise a few points if you have both revolving credit, such as credit cards, and installment credit, such as a mortgage or vehicle loan. Don't worry if you only have credit cards, since you can still earn and keep a solid credit score despite your lack of other types of credit. Recent credit inquiries. The bank or lender runs a credit check whenever you apply for a new line of credit to determine your credit worthiness. Too many recent credit inquiries on your record can lower your credit score because making numerous credit applications at once is a dangerous financial practice. Try to wait 3 to 6 months between credit card applications if you want to establish good credit. Additionally, it's a good idea to monitor your credit record and routinely check your credit score. Millions of Americans' credit records contain errors, and these mistakes may unintentionally lower your credit score. Examine your Equifax, Experian, and TransUnion credit reports carefully, and then challenge any errors you uncover. How to maintain a good credit score. Building good credit is the first step, but maintaining it will allow you to keep enjoying the advantages of good credit. How do you keep your credit strong? In essence, you continue to practice the wide credit practices that allowed you to initially build a decent credit score. Always pay your bills on time. Don't use more than 30% of your available credit. And keep your credit utilization ratio modest. Keep previous credit accounts open. Use your previous credit cards as evidence of a lengthy and trustworthy credit history instead. Although maintaining a high credit score is frequently simpler than establishing new credit, be cautious. Your credit score may begin to decline if you don't make on-time bill payments or charge amounts you can't afford to pay back. Credit can affect where you live. Mortgage lenders demand proof that you won't default on your loan before allowing you to purchase a home. Lenders won't risk giving you a mortgage loan if you don't have decent credit. Your credit will have an impact on your interest rate if you are approved for a mortgage. Your monthly mortgage payment is directly impacted by interest rates, which can increase or decrease the amount you are paid. A loan application with low credit scores may either be denied or approved more slowly. Even if you aren't looking for a home right now, your credit is still crucial. To decide whether to rent to you, landlords also consider your credit. Property owners want to be confident they will be paid because renting out a property is viewed as a loan. Auto loans require good credit. The majority of people don't have enough cash to pay for a car and their daily needs at the same time. Lots of people will apply for auto loans. Your credit score has an impact on your eligibility, the amount you can obtain, and the loan's interest rate. In general, borrowers with better credit ratings are eligible for larger loans with lower interest rates. Your options will be limited if you have bad credit. If you have bad credit, few lenders will work with you, and those that do will charge you a substantially higher interest rate for your auto loan. Your monthly payment for the car will increase dramatically with a higher interest rate, which will also increase the overall amount you'd spend over time. Business loans require good credit. A lot of people aspire to launch their businesses. The majority of business launches demand a large sum of money, which you might not have on hand. You'll need to apply for a small company loan in that situation. To be eligible for the company loan, you must have strong credit among other things. Living expenses can require good credit. It could come as a shock to realize that establishing utility services requires your credit. Electric companies claim that you are essentially borrowing 1 month's worth of electricity. The firm will look into your credit history before turning on your electricity. The majority of utility services, including cable, telephone, water, and even cell phone service providers, run credit checks. The bottom line: a good credit score is what? You have good credit if your FICO score is higher than 670. Understanding how your credit habits may be enhancing or detracting from your credit score is crucial, because there are many advantages to having high credit, such as getting access to better credit cards and reduced interest rates. You'll be able to benefit from all of the advantageous financial prospects linked to good credit after you understand how to build credit. Access to the top credit cards available today, which provide benefits ranging from cashback rewards to opulent vacation privileges, is one of them. That's it, guys. Whichever credit score is being verified by the company you're working with is the one that matters the most. If you liked the video, make sure to subscribe to the channel and hit the bell icon. Leave a like, share with your friends and families, and jot down your thoughts in the comments section below.